Estates Radio with your hosts Coco and Gregory, right here on LA Talk Radio.
Hello everyone, welcome to Glam Estates Radio Show. Another Wednesday, really very dark and cold today. I don't like that, it's depressing. But anyway, I'm your host, Gregory Papuchian, and with me as always is Coco Selborn.
Hello. Hey, Gregory, how are you doing?
I'm good, Coco. How are you?
I'm very excited to be here, and yes, it's colder than I would have imagined for the first week
I
of
had
November.
their names right this time, you see?
I didn't want to bring it up, but you
I
did.
didn't say I'm Coco and you're Gregory. I said I said the real name.
And in great partnership style, if you had, I would have totally gone with it. Sometimes I do feel more like being Gregory for the day, depending on who's calling, right?
Depending who's calling, you know.
Like, oh, yeah. No, I'm totally Gregory. They're looking for Coco.
That's right. Thank you all for tuning in. We have a very special guest today. We have Les Berman with us.
Yay, Les Berman!
Yay
What's
me.
up?
Yay, me.
Les, what's the name of your lovely group?
My group is EB Financial. We are mortgage brokers. I did my first loan in 1971.
What?
Wow.
1971.
Already, it's a couple of years ago.
So,
I was 2 years.
so you're telling me you're new at this?
Yes, I was 2 years old,
Excellent.
but I figured it out and got it done.
Wow. So you've been doing this long enough to see so many different changes, and have you been able to see changes in prices over the years and different types of mortgages, different types of things? Now, you're a mortgage broker.
That's
versus
correct.
a direct lender or banking facility. How would you define that for the public?
How that differentiates you?
Yeah. How are you different, my friend?
Bankers are put on earth to turn down loans. Direct
Come
lenders
Like that.
usually deal with hedge funds and mortgage banks. I am a broker. I go to the best place available. I have different programs available, and I do things that are different, and I work for the buyer. I work for the person needing the refi, and if they're not in shape yet, I help them and direct them to people who can help with their credit.
So you're kind of like a mortgage broker and financial coach for getting themselves in order for that loan. Is that accurate?
That's exactly right.
So that wouldn't matter even if it were a home that was for refinance or for straight up purchase, right?
That's correct.
Hey, what if they have bad credit, Les? What's going to happen then?
Well, believe it or not, I have a lender who will take credit scores as low as 500.
I saw that here in the paper that you gave us, and wow.
Right. But let me tell you what the difference is now versus during the feeding frenzy in the 2000s. Now, back in the 2000s, if you were breathing, you could get a loan.
Mm-hmm.
The test is a little stricter now.
I like that.
Now you have to prove your ability to repay the loan. And we can do that different ways. We can look at tax returns, but if your score is down around 500, I'm going to guess your tax returns are not terrific.
Mm-hmm.
So we can look at bank statements, and we can look at 12 or 24 months depending on the lender.
You can be creative.
We can be a lot more creative because we just have more programs.
Excellent.
Wow. So with all the different changes that have gone on and the significant difference between the, as you said, the frenzy of the 2000s and what you see today, what do you see happening as far as the types of loans that are becoming the ones that people are looking to you to help them with? What do you see the most frequently? I know you see a lot, or what do you see most consistently?
I tend to concentrate on getting loans for people who think they can't get loans because the bank has said no. Well, the banks are here to say no. So I will deal with the self-employed who typically have their CPAs write everything off so they only show minimal income for tax purposes. So in that case, I'll look at their bank statements. I will look for if your bank statements aren't that strong, but you have a lot of cash in the bank, we can look at the cash in the bank as long as we can verify it. And then we can do something called an asset depletion loan, which hypothetically amortizes the balances you have in the bank and adds that to your income to show what your gross income is. Let me give you an example. I had a client who was selling their house. They were buying a new house, but they didn't want to put all of their money into the new house. Their accountant did what accountants do best, and that is to protect the client from the IRS. But he did too good a job. They didn't have enough income, even though they made a lot of money. So as it turned out, in this case, the people had $2 million in cash and savings and investment accounts. So we were able to take the $2 million, sorry, wrong word. We were able to use the $2 million, not touch it, we don't take it. We figured out a monthly depletion if it was to be used over a number of years. It turned out in this case that the depletion allowance would be approximately, I think it was around $7,000 a month. So we added $7,000 a month to the bottom line that these people could demonstrate, and that was good for the lender, and they did do the loan because they had the balances. Not everybody has balances, so we have to figure out other things.
Wow. So you really, as you're saying that, what's crossing my mind, because I'm kind of visual, so I'll think of all kinds of things that this reminds me of. Less is more, ladies and gentlemen.
Less is always more.
That's correct.
You're kind of like the mortgage smoothie. You know, go in there and you're like, you want a combination of things. You want this effect, a healthy thing. You look on the board. You're like, I need to get healthy. I need to get energized. Okay, great.
A little bit
Give
of this,
all
a
your
little bit of that.
financials to Les. He's going to put them in a blender and get you the right combination of each one of those.
And he's going to do it, ladies and gentlemen.
Well,
He has proven himself.
I'll tell you pretty quickly if it can be done, but even if you're a day out of foreclosure, or if you had a short sale, or you had to give a deed in lieu of, or if you had a bankruptcy, I'm able to do that. I just did a loan for a woman who had a lot of equity in her house. She was in Chapter 13 bankruptcy. We were able to do a loan to buy her out of the bankruptcy and give her some extra cash. When I say buy her out of the bankruptcy, what it means is we're able to pay off the creditors in the bankruptcy, so it would be dismissed. And she was out of the
process.
out of the bankruptcy. But then again, we also made an offer to a guy who was in a Chapter 11. Yeah, he was in a Chapter 11 bankruptcy, which is a reorganization of the business.
Mm-hmm.
And we made an offer of financing to him. Now, understand, the guy's in bankruptcy. Okay, obviously there's issues.
Something's wrong.
What, Les?
Something's wrong.
What do you mean?
So we offered him a deal and a loan, and he said, no, I want a 4% loan like I hear on the radio all the time. Well, the only difference is that what you hear on the radio is people with
Be
pristine...
careful what you're going to say.
Yeah. They're on...
Yeah,
they're with
I was
pristine
going to say,
credit.
wait a minute.
We're on the
Yeah.
radio.
We're on the radio.
That's right, but we're not advertising. We're not advertising.
That's true. That's true. Hey, this is our show. We're going to tell you the truth.
That's you
Right.
got it.
People can find us consistently, not the fly. Well, there's a flyer in the mail from so-and-so.
Let you
That's
finish.
right.
So go ahead, Les.
But you can't read the really small print because the print is too small.
Right.
I don't
because they
have-
don't want you to read it.
I don't have small print because then I can't read it. So what
Less
I
is
do-
more again.
I make the print big and I explain it to you. And if you like it, you like it. And if you don't, then you can go elsewhere. That's fine.
So what did this guy in chapter 11 do?
He turned a loan down because he wanted he wanted a loan that's made to somebody with a perfect score with perfect credit
Right.
and everything else.
You told him to bring gloves, and so he
Well,
did.
I know, but
It was
putting my
really
head down in my hands.
it was really funny, but
I'll bet it wasn't funny 4 months later when he lost everything.
I don't know. I mean, but when I spoke to his attorneys who had referred the situation to us, and I just started to laugh. I mean, what else could you do? I mean,
4% is, anyway.
Yeah, I mean, if you have a 417 and your credit score is over 740, and if you have lots of money in the bank and you're a W-2 income earner, you can get a good rate. Let's talk about credit for a second. May I?
Would you talk about credit for a second, Les?
Absolutely. One of my favorite topics.
let me interrupt Les before he talks about credit, okay?
Okay, yeah, please.
Let
It's
me-
your turn.
Let me say, let me say for anybody who would like to call us, our phone number is 818.
Hey, everybody, what's going on here?
5085. 818-570-5085.
Yeah, please.
And also, I have all our social media right here on my.
You
finger.
do?
Yeah.
Is it Glam Estates?
It's very glam. You can find us on Facebook, Twitter, or Instagram.
I'm
You can
gonna
write
send
on
us
the
a
wall.
message.
Yeah, send us a message.
I'm going to send us a message.
Or a PG.
I'm not going to tell you what it says.
Can we read it? Is it
Yeah,
something
sure.
you can put on the air?
Absolutely.
Okay, we'll do it.
You'll find it later. It's
All
all
right.
good.
Les, go ahead. Tell us about credit.
So everybody knows you have to get a credit score.
Mm-hmm.
And
Wait, hold on. We just had our clients in from Europe. They did not know that credit was even remotely important.
They didn't know existed
And-
because
and
it doesn't
didn't
exist
care
in Europe.
though. No, but they were like, so what if I have a credit score? So what? I don't care about having good credit.
yeah,
like,
but
yeah, you do.
I can do loans for foreign nationals who don't have credit. But let me first talk about credit, then talk about not having credit.
Fair enough.
Right.
You're offered free credit scores from all kinds of places, and some of it's free, some of it you pay for. But the bottom line is this. Those scores really won't help you in a mortgage situation. For instance, if you go and buy a car, the credit score, the credit algorithm, the credit scoring mechanism is based on a score of 950 points, a scale of 950. But if you're getting a mortgage, it's based on a scale of 850. So right away, there's a little bit of a discrepancy with your car to the mortgage. There are at least 5 different FICO score algorithms that you can buy, that you can get. There's auto, there is insurance, there's I can't remember them all.
Rental.
There's rental, but there are 5 different types of scores, including mortgage scores. And mortgage scores are the only ones that are going to count if you want to get a mortgage. The difference between these consumer scores that you're getting online, etc., and a mortgage score are usually 50 to 100 points, where the consumer scores are higher. And I can tell you that when you come in and you show me a score that you got from a bank because they have it available for their customers or a credit card company, I can look at what you sent me and I can tell you almost within about 10 points what your real mortgage score is. It comes from experience, and it comes from knowing and having been around. So don't put a lot of faith in those scores when you're going to shop for a house or a mortgage. And the real estate brokers should know better too, but sometimes they do, sometimes they don't. So you have to know about that.
They certainly aren't going to get schooled on that, by the way.
Yes.
California.
But Coco, you mentioned something about somebody who came from Europe and wanted to buy a house and they don't know anything about credit. We're able to take non-U.S. credit into consideration. We have methods of getting the credit either through their bank or through some kind of institutional banking relationships that they may have. So we can get enough credit information about the people to make a loan possible. Also, foreign nationals don't typically come in wanting a very high loan to value because they don't get it in their home country. They don't ask for it here. So we can get a 60% typically loan to value for a foreign national. Sometimes we can hit 70, but usually it's around
pretty
60.
high. That's pretty high.
It's good. They
Yeah,
come
it's
in
very
and
nice.
they buy big properties and they don't put that much down in their minds.
Right, right. Yeah, we were having an interesting dialogue was with regard to why credit was important and how not having credit costs you a lot more. You know, that's why we talk about having a good enough credit score to really qualify for different programs. So you're not paying higher than you
Right.
necessarily need to. But sometimes there are times when you do need to do that. There's just no way around it. You know, it's better. I am sad to hear about our Chapter 11 buddy who didn't take the offer because he was holding out for 4%. Okay, don't do that. Please don't do that. Really saying to people that we get it. It's not the easiest thing in the world to not only obtain credit, but to maintain credit. And that's ultimately what any lending institution of any type is looking for, how you manage the credit. Not that you have credit or you don't have credit. A lot of people think, oh, great, no problem, I'm ready for my mortgage. I just closed all of my credit card accounts.
Right. That's bad.
That's the kiss of death. I actually was working on a refinance of a home that this couple, well, actually the husband inherited from his mother. The situation was when we pulled the credit report, we found that the gentleman did not have any credit. He had no credit score whatsoever.
Wow.
What we found out was that at age 50-something, he had always lived using his mother's credit cards. His car lease was still in his mother's name, even though she had died 2 years earlier. And he didn't understand the whole deal. Now, this guy...
How old is he?
He was in his 50s, growing up in the U.S., so he knew about it. So I said, okay, maybe we can use your wife's credit score. Well, turned out that when we pulled her credit, she also had no credit profile. And what we learned was she had a bankruptcy in 2012. It was a single creditor bankruptcy, which meant that she was only trying to get rid of one debt, which she did. And she never bothered to try to get credit again. What she did have was a debit card. Well, a debit card doesn't score.
Right.
It doesn't count. And by the way, a debit card is the worst financial card that you can possibly use, because if it's stolen and somebody cleans out your account with a debit card, the bank will not reimburse you like they do with a credit card. I would suggest that it would be in your best interest to cut up the debit card. Oh, am I dissing the banks again?
It's weird.
How does that
It's
happen?
odd. It's
Yeah.
strange. I like, you know.
I like lesson his stories. He's
I
like,
know, they're fun. It reminds me, we call the evil empire.
Well, it was.
It starts with a B,
Yeah, but
ends with an A.
no, you know what? Sometimes
What could it be?
banks do have a purpose, but not if you want to borrow money. They only want you if you want to deposit money. No, but for this couple who had bad credit, we got them a letter of intent from a lender. It was what's called private money or hard money. And the people who were making the loan were looking at it. It was a very low loan to value. It was something like 35% loan to value. And they really didn't care if the people made payments or not because it was going to be a great property for them to own. There are loans available for almost any kind of situation within reason.
Right. And what do you think the biggest changes are that have come up with this month? Well, I should say this month, last month's changes in the industry. How do you see that impacting the buyers and people coming to you for lending? What do you think that's really doing for them? I see positives and negatives, but I see
they're mostly positives because the new disclosures that have been mandated on residential real estate are really clear and easy to understand. Even I can understand them. I could not figure out the old ones. I really couldn't figure it out. It didn't make sense. You had a number on page 4 that related to a number on page 1 it was really bizarre. I knew how to catch the errors on it, but now the disclosures are really pretty simple. I mean, they're really forthright. And the only change really is now people have to have time enough to look over the documents and make sure that it is what they're supposed to be. And this is mandated by the new rules. And I think it's good. So what's happening? It's taking probably right now 15 to 20 days longer to close a loan or to close a purchase than it did before. If you were able to try and get a purchase done in 30 days, it's not really happening. They're more like 40 to 50 to 60 days. And once everybody gets on the same page, the real estate agents understand this, the mortgage lenders already understand it, it's only going to have a positive impact on everything. It's just going to take longer.
It's a better change, though. It's for the better.
Changes are definitely for the better.
Yeah, I agree. I think what I saw especially was that because there's a little bit more time, what wasn't happening before was that, things were happening like they would get to the end of the transaction, they're coming to the table, and the documentation would say something completely different than what they originally agreed to.
Mm-hmm.
Right.
Those rates were much higher. They were different. That wasn't what they had discussed. We saw it happen.
I saw it happen. I was helping my daughter, this was a year ago, with her loan, and this was her first purchase. And I went to the escrow signing with her, and I'm
I
reviewing.
remember that. You told us that.
Yeah, I'm reviewing the documents because my daughter wasn't going to read it the way people should, but that's okay.
Well, in all reality, to interrupt you real quick, if you're not familiar with those documents, they can be extremely overwhelming to look at. You wouldn't even know what you were looking at. 90% of the time, it's like, what does that mean? It doesn't mean anything.
Right.
So
Like
that's why they could get away with it. That's why all these companies and these individuals were getting, much higher and bigger numbers at the last second because they couldn't tell.
Exactly right. And on my daughter, the escrow that my daughter had to use because it was dictated by the listing agent,
Yes.
there were $9,000 of mistakes in the calculations, and of course the mistakes were in favor of the seller. And the escrow person said, "Oh, I must have missed that." And I know this has happened before. I won't tell you the expletives that my daughter used because she is a lady. But everyone you can imagine, she used them all. So no, these forms are a lot. They're a lot better, and I think overall, once we get this time situation all figured out, it's going to be better for you, the consumer.
We agree. Yeah. I think it's nothing but good in the end
Yeah.
for everyone to have more time to look at the paperwork, to understand it, and it's certainly a lot more clear. Now, in some cases, uncomfortably clear. You start looking at numbers, you go, whew, I didn't realize that's what was going on there, but that's what it is. So,
Exactly. And, several years ago, my dad was in his late 80s, maybe early 90s, and I had asked him, Dad, when you bought your first house in 1941, or maybe it was 42, do you have any idea how many pieces of paper you had to sign? And he said, probably not more than 3 or 4, but I can't remember.
Wow.
And I said, what did they say? And they said, they said, pay me or I take your house back. So now we have paperwork that's 80 to 100 pages long.
yeah.
And what does it say?
Same thing.
Pay me or I take your house back. They just got a lot of lawyers in between.
I
Yes,
would really love to
exactly.
see
So-
like, contracts and stuff from the
Yeah.
40s, let's say.
They were probably like this, and a little piece of paper. Do you
Should
want
be-
it?
Should be like there should be like
exactly.
a real estate museum or something where we can see stuff like that, right?
That's a great
Love
idea.
Let's do it. Let's do it. Maybe we should start at
Who can
Rudolph
have
Schindler's
papers
house,
and that, like that? Who can have like paperwork like that? I don't know.
the California Association of Realtors, and we can talk about all kinds of different things that were going on.
And I am sure there are people out there who are still in a house that they bought 50 or 60 or
Oh,
70 years
definitely.
ago.
Well, we know one.
Yeah, well, my dad's in the one that he got in 1971.
There you go.
Yeah, I keep asking him. I'm like, "So you ready to move
How much
yet?"
he bought it full extra with the pool?
He bought it for $18,000. It was a 5-bedroom.
Oh, he paid a lot.
He had a lot of kids.
Oh.
He was like, "We got 5 here. There's another one on the way. Let's figure it out." So, and at that point, they had the discussion. They had to get this. It was either $18,000 for the new house, or more like 25 somewhere else. But then they had the big argument of whether or not to get the pool. The pool was another $3,000. And that was a significant argument. They said they were going
So
back
the
and
three
forth,
is
back
about
and forth, back
30
and
now,
forth.
right?
Yeah.
Like a pool costs about like 25, 35, something. Like
Well,
an average
no.
pool.
Well, it depends what you're.
Yeah,
what
for
you're
sure.
doing.
In the small yards that we're talking about in a minimal pool, absolutely.
I'm saying like the 3 became 30 now.
At least, yeah, exactly. That would be a reasonable number. So,
Yeah, wow.
and of course, interest rates back then. What were those like?
Oh, they were pretty good. They were pretty good. I remember in 1981, I believe, interest rates for a mortgage hit 18%. It wasn't for long. It was for about 6 months.
18%. Yeah.
18% was the first mortgage. And when I moved to California in 1985, my mortgage was 12% plus points. And I
Yeah.
didn't think twice about it. I thought that was a terrific rate. So now, what we're going to see over the course of the next few years, maybe, is we might see rates as high as, are you ready?
I'm ready.
6%.
What are you saying?
Rates are going to go up.
They are
And,
going to go up.
So you've got to buy now. The thing is, just find what you've got, put it together, check your credit. You should be looking at your credit at least 6 months in advance, and possibly even longer. If you've had issues, you need to get help, because we got to get the issues out of the way, because the higher the credit score, the lower your interest rate. So, I mean, it's really an easy equation. It's things you have to do.
And if you're thinking, I'm going to buy next year, that means you need to get started now.
Absolutely.
You can't start thinking, whatever your number is, like even if you're thinking, when the kids are out of school in the summer, okay, that means you have to be done and ready by March. That means you have to be ready now. Get started. Because it's going to take some time to look at stuff, and it's going to be irritating when you look at if your credit's not perfect and you're like, darn it, I got to take this.
First
and
of
take
all,
care
find
of
your
it.
realtor. 562-537.
What was the number? I only got the 562 part.
537-2595.
Okay.
Again, ladies and
and then we
gentlemen.
have Coco too.
562-537-2595.
I just wanted to
I
make
was just
sure that
kidding.
it was the right number.
I was just kidding.
And you do, you know, I've been in the business for a long time, and I've seen really good realtors, and I've seen average, and I've seen not so good. I have to tell you, when you call these folks at Glam Estates, they're on top of the game, and they're not going to mess around
Thank
and
you, Les.
show you stuff that you can't hope to get to. And don't. And one thing I've learned
What a nice
is
thing
if
to
your
say.
budget is 500,000 or 300,000 or $1 million and whatever, don't go and ask for something that's 200,000 or 100,000 out of your range, because you're going to fall in love with it, and then you're going to be upset because you can't afford it. Make sure that you know what you can afford before you go shopping or as you're shopping. Because if you need some help, whether you're going to need some assistance from a parent or you're going to try and do something a different way, you have to know that at the beginning. You can't fall into this unless,
And become emotional and all that.
yeah, I mean, you can't hope to become really, really lucky and hit the lottery, because I'm going to hit the lottery, and then, there's not going to be any room for anyone else.
That's right.
No, but I mean, you have to be realistic, and you really have to work well in advance if you can. And you really have to be honest with yourself. I think that's the important thing, because if you are working with Greg or with Coco, they're going to be honest with you. So you really have to think hard about what you're going to do, and just you're going to have to trust some people, because they're going to help you.
Well,
Thank you, Les. We appreciate it.
thank you. That's how we. That's-
$200 you said, right?
anyway. But that's why we like to work with you too, Les. Is that what we really appreciate about working with Les is that he's going to tell people the truth from the beginning. Like, hey, listen, this is what you're going to need to do.
Yep.
You'd
This is
much
what you
rather
should
know-
expect. This is not.
That's right. And you wouldn't want to find out the day of, or you're like, oh, we're going to this house. We love it. We can't wait. We're going to write an offer. Oh, wait, we have to get pre-approved. Oh, shoot. Okay, I'm going to call Les. And, I'm only approved for $650. This house is $1.7 million. It's going to be helpful to at least knowing Les is going to tell you what you have to do in order to get to that house, and know it in advance, and not tell you a story about it. Because other lenders out there, unfortunately, whether they mean to or not, can guide people in a direction that is not helpful or informative or accurate. So make sure you're working with someone who's going to tell you the truth and is your advocate during the process and communicates. Les communicates. I really appreciate that about him. Nothing makes me more frustrated when I can't get a hold of somebody. Like, give me a break. Never mind that. But I digress.
And he has all this experience, all these years. He has seen everything, every change possible thing that's happened in the market the last, how many years again?
More than 5.
More than 5. That's why we like him so much. More than 5. More than 5.
Well, what I say normally is that when I started in the business, and all of you folks out there in Radioland can see this, when I started in the business, I had a full head of hair. Now, I can't find a hair.
What about, let me ask you something. Can you find money for people who have already, they own their place, but they don't want to sell? So that's something that you can help them with?
Oh, yeah, and then I want to ask something.
No.
Actually, there's a program, there are programs out there that are really quite interesting. There's a reverse mortgage program, which is a government-sponsored program that allows you to borrow money and never have a mortgage payment. What happens is the interest accrues, And when you leave your house, whether you go into a nursing home or whether you're off to the happy hunting grounds, when you're out of your home for a certain amount of time, then at that point the loan has to be repaid. The bank does not take your house. If there's any equity left after all the accruals, you sell the house, you pay off the loan, and whatever's left is yours. But in the meantime, or actually whatever's left goes to your beneficiaries. In the meantime, you've had 10 or 15 or 20 years during which you have not had to make a mortgage payment. Your life has been quite a bit easier because as inflation happens, you know you've got the security of knowing that you're not going to lose your house. So that's really important. And then within the same program, if you're age 62, get this, I just learned this, and you have a financial...
Yeah, I was going to ask you about that. Do you have any way that I can put 300 and make 1 million?
Yes.
Tell me about that.
If you're 62...
What if he's 26?
26, no, the numbers are reversed.
62. Okay, got it.
If you are 62 and you take out what's called a home equity conversion mortgage, and you don't use the funds at all, you just leave it there because you don't need it. When you're 82, you're going to have $1 million credit line because the credit line increases by a set amount every year, and that's guaranteed by the government. So with a good financial planner, if you have a certain amount of assets,
We have some of those for you.
Yeah.
Financial planners, we can refer you.
those are great. But let's say your financial planner says, well, to live the way you want to live, you're going to run out of money when you're 85, and you have long genes in your family. You're going to say, well, what am I supposed to do after 85? You can use this device so that once you are over 85 or you're 82 or whatever the number is, and everything is available with the calculating. There's a program to use. We can show you how this works. You can start drawing down on that amount of money, and you can continue to live your life in the manner in which you've always been accustomed. So you don't have to worry about spending down. You don't have to worry about losing your house. You don't have to worry about going into a nursing home if you want to stay in your house. So it's a great financial planning tool. It hasn't been used that much, but it's there if you want to use it. I've got a case history where there was a gentleman whose funds, there were a few times during the 20-year period where some of his funds didn't pay the way they were supposed to, so he had to pull money out of this mortgage. But still, at the end of the period, he still had, I think it was $675,000 that he still had available to him to enable his life to go on. We have that study that's available to you.
Wow.
Wow, that's great.
That's terrific. My goodness.
I'm looking for something like when you're 30, you can put $100. In the next 6 months, you can make like $1 million or $2 million. But you don't have anything like that, right?
Yeah, do tell.
Yes, I believe it's called Mega Millions Lottery.
I was going to say gambling.
Yeah. Or there you go. You could try that
That's
too.
what I'm interested in. I don't know if you find anything.
You can. I think if you go to Vegas and you put 50 on the red and 50
Has never
on the black.
happened, man. I'm telling you.
Oh.
And don't forget about the other one. Put it on everything.
Yeah.
I'm always borrowing money when I go to Vegas all the time at the end.
Oh, well, remind me not to go with you.
I was just going to say, you're so not going with me to
I know,
Vegas. Hey. Better off in real estate, huh?
Yeah, well, someone's got to stay behind to man the phones on the weekends.
I know. He's busy. He's really great at DJing. He's the great DJ,
There
as
you
you know.
That would be great.
Yeah,
You just got to have the right tunes playing when you're doing an open house.
Uh-huh.
That is
Exactly.
actually pretty accurate, yeah.
At least I know to do something when I gobble too much. Vegas is.
Yeah,
I
I
can
mean,
figure it out.
You gamble too much.
So
So don't gamble too
I
much.
never gamble anywhere. I don't
I
like
was just going to
gambling.
say, give me a break. This is
I don't
very
like gambling.
conservative.
I might spend
Your $7 that you
at
use?
my trip like I don't know, $200-300 just to say I did something.
that much? Wow.
Yeah. Oh, is it
I'm
that
not
bad?
going with you. My budget's only 100.
No. I just
I'm cheaper than that, actually. I'm
just
like
like
40,
having-
maybe. I'm like, I don't even care. I just want to go have fun and do something great. And
I'm not going with you guys.
I know all the sites around Vegas, too. Go figure. You're like, go to Vegas. I'm all excited. Red Rock Canyon.
Oh, I like Red Rock Canyon. I actually took my kids skiing there.
Really?
Yeah, that was when they were kids. Now they're grown-ups. So, they're grown-ups.
Are they grown-ups?
Yeah, one of them is married, so I guess she's grown up now. Yeah, they're grown up. It's amazing how that happens. We just want our kids to stay little and be toddlers for a long time, and then move out of the house to go to college. So,
Well, yeah.
yeah, I mean,
Is there something wrong with that?
No, I think it's great, and we have to have our pets. We have to have our dogs with us, and we have to live this fantasy life, which everybody wants to live.
If only I could get a social security number for my dog. That would be great.
I think you could probably do it. I'm sure people have done that already.
I'm sure it's happened. Well, you've seen these stories that come up every now and then that the dog got a loan and they actually sent them the money.
Yeah.
They're like, okay, we're not going to pay it back, but that's okay. Not on a mortgage, but it's like a credit card. They got a credit line. This is very exciting times.
I think that would be really good. You have a dog with bad credit.
Bad dog.
Yeah, there you go. But I would bet that you're still going to give that poor doggy a bone when he wants it.
That's right. That's the way it should be for all of us poor doggies. I mean, for all of us who are out there in the industry, and our community at large who lost their homes, and that's why this is a great time to buy. All kidding aside, that's why it's a good time to buy. That's why rates are as low as they are, because they're low. This is an encouragement because no one has owned so little property in the country since 1967. That's why the push is on. Buy something. Buy something to bring up your property ladder for the future, your wealth management and building. That's the way to bring something.
If you've had a short sale, you can get a conventional loan. Even with a short sale, you don't have to wait 4 years. Now it's like tomorrow. The short sales happened, or when the short sales did happen, it wasn't because of anything you did.
Right.
It was a market condition. It was a national market condition, and lenders have finally realized that. So if you've had a short sale in the last year or so, and you've been trying to figure out what to do,
Call Les.
yeah, and call Coco and Greg, because they're going to be able to find you a house.
What's the number people should call you at, Les?
My number is 818-305-4695.
It's a good number to know.
Excellent.
It's the best number to know.
That's the best.
Next to
Agreed. 323-425-9484. Or Gregory at?
562-537-2595.
It's simple.
Like that.
Yeah.
Now, honestly, that's the best step forward for yourself is just call. What's the worst that happens is you call and you find out what your next step is.
Yep, that's right.
That's right.
That's right. And the key thing is, and some of you may know, I write a blog. I've been writing a blog for 10 years. And my constant reminder virtually every week is what I learned, I think, in 3rd grade, which was if you don't ask, you don't get.
Mm-hmm, mm-hmm.
You have to ask.
Very true.
And
That's very true.
By asking, you're going to find out something that you may not have known or that you may have known. But what you will find is a way to solve the issue. And that's what we all want to do, is solve the problem.
And Les has many options. He's very creative, and as a broker has many options to fit everybody's needs.
Yes. Thanks so much for coming on the show today, Les.
My pleasure. Thank you for asking me.
Thank you,
Our
Les.
pleasure.
Yes.
You're kidding. So that's where to call, ladies and gentlemen. Please call Les at EB Financial, and his direct number is 818-305-4695. I even read that without my glasses on. That wasn't bad, honestly.
Not at all.
I was like, I better reach the thing.
That's because it was in Braille.
Les, are you ready for a big Glam It Up, baby?
I'm absolutely ready
All right.
for it.
Thank you all for tuning in. Until the next one,
Glam it up, baby.
You're listening to Glam Estates Radio with your hosts Coco and Gregory, right here on LA Talk Radio.